This is Eric Mwatha with Mwatha.com. Going into November 2007. One of the most beautiful things about great stocks is that they will always give you a second, a third, and sometimes even a fourth or fifth time for you to come in and join in the celebration. Before we take a look at what is happening and why the stock might be a buy right now, by the way, this is one of the best stocks in 2007. Actually moving from around $2 last October and trading as high as 24 this year for a huge, monstrous gain. Stock I'm talking about, of course, is TRCR, and we are looking at a 3-year monthly chart. What I'm gonna show you is why the stock looked good earlier this year and why it might be giving us another opportunity to come in and enjoy be part of the run of the celebration going on right now into the new year. Let's assume that you missed this initial move from $2, $2.50, somewhere there, all the way to $8. It happens. I know I missed it. So because I was actually expecting the stock to settle down around here at the time before it broke out again. But what happened is, like all great stocks do, they never give you a chance until it's too late. So eventually it did settle down around I think $7, $8 around there on a weekly basis. And after it settled around there and took out that closing high right there, it was added on a public blog as a buy. So we did actually nail that entry right there around $7, and hopefully riding it all the way to the 20s. Anyway, so let's go back and look and see why this looked good at the time. So we are assuming we missed this move, even though if you go back on a weekly chart, you'll see that all the indicators I'm talking about also gave strong buy indications. So at the time, we see that when the stock, and like all great stocks, when they break out on any, be it a daily, intraday, weekly, it don't matter, when they break out, they always follow through. Great stocks have a tendency to follow through. It's a mark of just superiority and a kind of confirmation of strength. So follow throughs are very important in the stock market. So stock breaks out and follows through. Let's drill down. At the same time, we see when the stock broke out, volume was very heavy, and on the subsequent month, volume was even heavier. Our RSI, which is a measure of sentiment, should be above 68. At the time of this breakout, it was probably in the 80s. Very strong breakout, another indication of strength. And then we also see that our on-balance volume made a new high at the time. Our performance against the S&P 500 made a new high, and we will also see that our MACDs had already crossed over. So important indication of strength again. So right now we see that the stock, this actually towards the end of last month, which is actually this week, the stock has moved above 1920 on a monthly chart. This now becomes another buy point for those who will hold on and wait for weekly breakouts at this level here. There should be another buy point on a weekly basis as a weekly closing high around there. But if you're aggressive, this becomes a very interesting buy point right here. The volume is already good. Since the month is closed, that's already confirmed. We have good volume right there. Our RSI is at 76, I mean at 79. Very strong. Our on-balance volume should move to new highs. Performance against the S&P 500 should move to new highs. And our MACD is just about to cross over. Another indication of strength. So this might be one you might want to watch into the new month. And here we go again. Here's a stock that is giving you another opportunity to be part of one of the great stocks in 2007. Next up, we are going to take at a 2-year weekly chart for the NASDAQ. And me, being the biggest bull that ever existed, has been, predicting that we are going to see a strong move into March of 2008 before we take a small pullback. I predict that this market is setting itself up for a move to 3200 on the NASDAQ. Between now and March, we see that we are already breaking out right here on a weekly basis above a prior weekly closing high. And we should have strong volume by the end of this week. But at any case, it's very important to see what's going on here. Is as everybody was expecting the market to crash in October in celebration of the 20th anniversary of the 1987 crash. What the hell were they thinking? Hello. But anyway, so we're at new highs. Hopefully we're going to have a follow through next week. That's going to be a very strong indication of strength. If we get that, that's going to be a further indication of what's coming down the road in the next couple of months. At any rate, it doesn't really matter what the market does. As long as you're buying quality stocks, you're using your stops, you're letting your winners run, and you're taking partial profits along the way, you should be okay, irrespective of what the market does. So we see that we should have a strong close to the week. If we get strong volume tomorrow, being a Friday, we'll need our RSI to move above 68. Actually, the RSI is currently at 67.5. Should be okay. So even if the stock market doesn't move tomorrow, it don't matter. We are still close enough for a bullish breakout. Our on-balance volume is already at a new high on the NASDAQ. It is outperforming the S&P 500. This just tells you that tech is back. Large cap tech is back. It also means that you should be moving your money to technology right now. Overweight in that sector. And our MACD on the NASDAQ is crossing over. Yeah! This is Eric Muathe with Muathe.com. As always, haha! Peace and blessings to you. I am out. Happy Halloween too. Yeah.